Don't struggle with section B question because my FR series is here to rescue you. I'm Neha Bansali, ACCA and the Indian Chartered Accountant. We are now starting with our FR series where I'm going to be solving past papers, giving you some good exam tips which you can use in your examination. So today we would be solving section B questions. So we'll be discussing, what strategy you need to follow, how do you manage your time, and all of those in this video. So stay tuned till the end. And guys, please do not forget to subscribe to my channel as a lot of FR solving questions are going to be coming up in the near future. So you don't miss out on that. Do share this with more of your FR friends. So to begin with, today I'd be discussing a practice paper from the CV platform. So I've picked up the practice paper 1 of FR. And now let's start solving this and understand how to go about it. Now see, when you have your section B question, sometimes you get confused on how to relate the data to the case study. So, one important thing when you're doing the case study, please use the highlight function very, very well. So, you need to start highlighting data when you're reading it so that when you come back to the question, you don't spend too much time and you have the important factors already highlighted. Now, when you are reading the question, highlight the dates, highlight the numbers, year end, what is the reporting period, all that is few important things which you should highlight and keep in mind while solving the question. So this question is typically on your non-current assets. We know non-current assets mostly come every attempt. It's a very, very important topic. However, this question is relatively simple. Now, again, how do you also look at your time management or time allocation? So now how do I look at time management? So basically we get 5 questions which is for 10 marks. So follow the rule that 1.5 minutes per mark. So 15 minutes is maximum what you need to spend on this question. Now don't start timing yourself for each MCQ because it takes a lot of time. You have to say, okay, I am starting the question now. It is, let's say, 12:15. So by 12:30 I need to finish this question. And then probably you can just start seeing the time in some time. Okay, it's 12:40, then just leave it and then move ahead. And guys, there is no negative marking, so please attempt to the question, at least the MCQ ones, even if you're not sure. Now let's begin. Afroid Co has a year end of 31st December. That's important to remember the year end, and operates a factory that makes computer chips for mobile phones. It purchased a machinery on 1st July 2013 for $80,000, which had a useful life of 10 years, and depreciation is on a straight line basis. Time apportioned in the year of acquisition and disposal. The machinery was revalued to 81,000 on 1st July 2014. There was no change to its useful life at that date. So after 1 year, you are doing a revaluation. The life remains the same, which is 10 years. A fire at the factory on 1st October 2016 damaged the machinery, leaving it with a lower operating capacity. The accountant considers that Afroid Co. will need to recognize an impairment loss in relation to this damage. The accountant has ascertained the following information at 1st October 2016. The carrying amount of the machine is $60,000. An equivalent new machine would cost $90,000. The machine would be sold in its current condition for a gross amount of $45,000 and dismantling cost would be $2,000. In its current condition, the machine could operate for 3 more years, which gives it a value in use figure of $38,685. Now let's start looking at the question and then we will see how the information is important. In accordance with IA 16, plant and equipment, which is the depreciation charge to Afroid Co.'s profit and loss in respect of the machine for the year ended 31st December 2014. So now typically if I have to calculate depreciation as on 31st December, now I know 6 months is pre-revaluation and 6 months is post-revaluation. So on 80,000 for 6 months depreciation I will calculate. And guys, please keep your calculator handy because you can quickly solve on your calculator and it makes solving the question very easy. Now, if I have to calculate 6 months depreciation, 80,000 divided by 10, 8,000 depreciation per year divided by 2, 4,000 is for 6 months. And then for the next 6 months, 81,000 divided by 9 because 1 year already has lapsed. So, I will calculate depreciation only for 9 more years divided by 2. 4,500 for post revaluation 6 months depreciation plus 4,000 pre revaluation. So my answer is 8,500. Now moving on to the next one. IAS 36 impairment of assets contain a number of examples of internal and external event which may indicate the impairment of asset. In accordance with IAS 36, which of the following would definitely not be an indicator of potential impairment of asset or group of asset? So, which are the indicators of impairment? We should tick which is not is the answer. An expected fall in the market value of one or more asset? Yes, definitely, then the value is decreasing. So, this is an indicator of impairment. Adverse change in the economic performance, of course, because that is lowering your value in use. A significant change in technology environment in which the asset is employed, making its software absolutely effectively obsolete. Again, this is an indication of impairment. So simply you can select the last option. Or the carrying amount of an entity's net asset being Next one. What is the total impairment loss with Afrod's Co's machine at 31st October 2016? So for this simply you have to go back to your impairment loss equation. So you have to start thinking very quickly. Impairment loss is equal to carrying amount minus recoverable amount. Recoverable amount is higher of fair value and value in use. So if I go back here, all of this is given to me. So this gives me my fair value less cost to sell. So 45,000 minus 2,000, 43,000 is my fair value. Value in use given to me 38,864, 865. So higher of the two is my recoverable amount. So recoverable amount is 43,000. This is simply given to confuse you, has no relevance here. 43 minus 6750. So 6750 minus 43,000. So 17,750 is my answer. And if you're getting confused in the exam, you can also do a backward calculation. Impairment loss given to me is equal to carrying amount minus recoverable amount. Carrying amount I know 60,750. So you do 0 plus 60,750. None of those figures match these three. So it's not there. Then you can do 60,750 minus plus 17, sorry, minus 17,750, 43. Okay, so this makes sense. So you can do each of these backward calculation also in the exam if you're getting stuck. The accountant has decided that it is too difficult to reliably attribute cash flow to one of its machine and that it would be more accurate to calculate the impairment loss of the factory as a cash generating unit. So now what is a cash generating unit? Cash generating unit is a group of smallest machineries or smallest assets which generate cash for the business. Now sometimes it's very difficult to identify how an individual asset is going to generate money. Okay, but a group of assets put together is generating money. For simple example, if I'm making a computer chip or a mobile phone in this case, I might have multiple machineries, an assembly machinery, a machinery to make the cameras, machinery to make the glass. Now, all of these individually do not add value to my business, but as a whole, they add value. So, I'm going to group all these assets together and they are called as cash generating unit. Whenever I need to do impairment of cash generating unit, in accordance with IS 36, which of the following is true regarding cash generating unit? A cash generating unit to which goodwill has been allocated should be tested for impairment every 5 years. No, it is not true. Whenever there is an indication, we test for impairment. And remember, goodwill to be tested for impairment annually, not after 5 years. A cash generating unit must be a subsidiary of the parent. No, any company can have a cash generating unit, need not be subsidiary and parent company only. There is no need to consistently identify cash generating unit based on the same types of asset from period to period. Uh, Again, yes, we do not have to do this concept every now and then. Mostly when there's an impairment is when we try to test for cash generating unit. A cash generating unit is the smallest identifiable group of assets for which independent cash flow can be identifiable. That's the exact definition of cash generating unit. Now moving on to a last question, which is on your impairment calculation. Okay, so I'll probably do this so that you understand this better. On 1st July 2017, it is discovered that the damage to the machinery is worse than originally thought. The machine is now considered to be worthless and the recoverable amount of the factory as a cash generating unit is estimated to be 9,000 $9,50,000. At 1st July 2017, the cash generating unit comprised of the following assets: building, plant and machinery, including the damaged machinery at the carrying amount of 35,000, goodwill, net current asset at recoverable amount. In accordance with IS 36, what will be the carrying amount of asteroid scores, plant and equipment when the impairment loss has been allocated to cash generating unit? So we need to do allocation of impairment loss and then give the value of plant and equipment. So first we will calculate what is my total impairment loss. Okay, impairment loss is equal to, you don't have to do all this in the exam, but I'm just doing this to explain it to you. You can do it simply on a calculator. Carrying amount minus recoverable amount. So in this case, carrying amount is 1170 minus 9,50,000, which is equal to 2,20,000 is my recoverable amount. First, write off completely using goodwill. Goodwill given to me as 85,000. Then we know machinery is damaged, so we will write off the machinery also completely, okay, which is 35,000. Then remaining loss is equal to 2,20,000 minus 85,000 minus 35,000. So 1 lakh is my remaining loss, which I need to allocate between building and plant and machinery. Now I'm not going to allocate it to my net current asset, reason being it's already stated at recoverable amount. You cannot write it off below this. So I have building at 5 lakhs and now I have plant and equipment at 3 lakhs. So I need to allocate 1 lakh to it. So how I will allocate to plant is based on the proportion of the carrying amount. So that is 1 lakh into 3 lakhs divided by 8. So how I got 8 was value of building plus equipment. So 1 lakh into 3 divided by 8 if I do, 37,500. So the balance both plant and machinery will be equal to 3,35,000 minus 35,000 we have written off above and 37,500, which is equal to 2,62,500. This is the value of my plant and equipment. So this is how you go about solving your section B question. Read the question, highlight the important part, and then move on. And try and understand and break down each of your concepts really well. So this is how you go about solving your section B question. Read the question, highlight the important points, then read the MCQs and try and relate to the concept and then solve it. So in the exam, I am sure you can manage all your section B question within 15 minutes if you have practiced well, if you have good concept clarity. Uh, I hope you have understood the asset topics, impairment topics. However, if you're having any kind of doubts, require any clarification, you can always reach out to me. You can also drop in a comment below, and I will be very happy to help you. Please stay tuned as I am going to be solving the rest of the paper, section B, section C, in my upcoming videos. So guys, don't forget to subscribe to my channel so that you do not miss on these updates. I'll be back with more solving of questions. Till then, take care. See you all.